India's industrial production contracted by a largish 4% YOY and about 5.2% month on month. This is a decline of 14% from the May 2022 peak and works out at about a CAGR minus 2.7% since the pre-COVID levels. Remember, the October IIP print corroborates weakness as output was weak across manufacturing, which fell by about 5.6% YOY. And to some minds, the IP data also indicates the global manufacturing slowdown being felt, the impact of which is being felt in India as well. Now, does this raise concerns on the sustenance of the capital goods sector with a specific focus on the machinery sector, which had experienced a disproportionate surge to a lot of minds due to export orders? We talk about that and about Thermax's own plans for growth within this landscape with Mr. Ashish Bhandari, Managing Director and CEO of Thermax. Mr. Bhandari, great having you. Thanks for joining in. Hope all is well.
Hi, Neeraj. It's my pleasure to be here and look forward to our discussion.
Thank you. Can I start off with first the large airplane view around how do you see the Capex cycle for the next few years? Because the overarching belief is that while private Capex has still not come to the fore, the government Capex alone should take care of kickstarting this Capex cycle, if not already. What are your thoughts?
Look, I think private Capex has to come into play, and we are seeing all the signs that it will come into play. The debts are being loaded on in many industries after a good period in between where a lot of companies were averse to taking in new capital. Many of our biggest industries, including steel, cement, are talking about a very big set of expansions. And then at the back end, all the policies that are coming around PLI and many of the new investments associated will kickstart. I mean, there's PLI, there's a whole logistics boom that is expected, textile parks that are expected, pharmaceutical parks that are expected. So all of that, I believe, we may go through some amount of turbulence in the short term, but the medium and long term story on Capex in India, I continue to be quite bullish on that.
So you rightly put the term that I wanted to ask, turbulence in the short term. What do you make of this data that is coming out? Is it the global slowdown that is impacting the Indian IIP numbers as well, or is it something else?
I would say mix of two things. One, the global slowdown will affect India. You can't, if the rest of the world catches flu, we will get a cold as well. It may not be, certainly won't be as bad as what some of the other economies will go through. I do expect a little bit of slowdown in the Indian context as well. The other thing that is, at least that I'm trying to determine, is that we have gone through this V-shaped recovery and went well above this V-shaped recovery. And while in certain sectors, manufacturing has slowed down a little bit in recent months, in many other industries, including automotive, we are seeing some of the best ever numbers being put out as the set of supply chain bottlenecks are also clearing. So the next few months will be interesting whether this demand story and this private consumption driving new demand, whether that story continues to build up and as supply chain bottlenecks get cleared, does demand come back strongly across sectors, or does the global slowdown continue to weigh a little bit on India and we get pulled back with it? Yeah. So your guess is as good as mine, and I would say this is a question better put to the economists that you have access to. I can say from Thermax's point of view, we went through in our base orders. And the base orders is a good way to look at our business. Our base orders, which is beyond any big order, 300 plus crores above, which used to be of the order of 1,000 crores pre-COVID, in the 2018-19 time period. That number now is at an 1,800 crore number. So while that number may have slowed down a little bit, 10% of it is price impact, you take all that out as well, we are significantly higher as a baseline compared to where we were previously. That baseline now is not growing the way it was, but even sustaining it at these numbers is something that is not to be taken lightly, because it's saying we are humming but we are humming at a gear which is higher than where we were before.
So how does one read into the comments post Q2, wherein you said that the new order inquiries are slowing up despite the fact that your numbers looked okay? Is it a pause? Could it be an extended pause, or does this comment of yours just right now about the base number being high mean that the quantum of orders may be lower, but the average ticket size per order being higher would mean that eventually it'll even out?
Actually, what I was trying to say, and clearly did not do a good job of explaining it, because I've had this question from a few. It's like our orders were our pipeline was going like this, yeah, and now we have plateaued, which means that we are not growing at the rate perhaps that we were growing previously, but the plateau that we have had is at a much higher base than we were before. That is all that I meant. The second thing that has happened is that the big refinery orders, which were the 800,000 crore potential orders, and the FGD orders, both of those, the FGDs we had planned will come down to zero, and the refining wave is also now taking a bit of a pause with a big refinery in Rajasthan, most of the ordering being complete. So some of the big ticket orders which we had last year, we won't be able to replicate this year. But overall, I'm quite happy and bullish with our overall order situation. Yeah, the base that we are at is at a much higher number, and this is driven by everything that I've been talking about, is the move towards different energy sources, different energy mix, and how some of that is providing tailwinds to Thermax.
Mr. Bhandari, I mean, 16 or 17 sectors, if I'm not wrong, PLI schemes, though companies themselves say that the Capex requirements need not necessarily be very high. My question is, can that plus a little bit of metals, plus a little bit of cement make up for the overall aggregate number? What are the things which are driving? What are the things which are pulling back? And as an aggregate, could it be even Stevens, or could it be slightly lower than the average of, let's say, the last 12 months?
Yeah, no, it could definitely be lower. Yeah, but I'm saying we are going through this doldrums period where my ability to say what the future will hold, at least for the next 6 months, is not as good as I would like it to be. Yeah, because we are getting some positive signals, some negative signals. The net of it will be what it will be, and some of it will be, even in some things like food is perhaps slowing down, but beverages continues to grow. Yeah, and the top 2 or 3 beverage manufacturers have been setting up plants very, very aggressively. Distilleries have been very active. Sugar, ethanol has been extremely active. So there are certain segments. Meanwhile, pharma, which was on a tear, has slowed down a bit. Cement, where we went through this waste heat recovery boom, has slowed down a bit. On PLI, the interesting bit is, as a company, Thermax, we don't do much in semiconductors per se. Mm-hmm. Yeah, as an example. Yeah, so we don't have equipment that is semiconductor industry, but semiconductor industry will need massive amount of utilities, will need zero liquid discharge solutions, will need desalination plants, because they're all requiring water of variety of different sources. They need steam. So in a very different context, Thermax comes into play, because all of them drive some amount of primary demand, and energy demand in India is continuing to grow at a very reasonable rate, all said and done. So that gives you confidence that there's some fundamental dynamics that are in play, that are propelling us forward. And some of this short term, like October IIP not being good, we can't anchor ourselves to those specific numbers. We have to have a broader view of things.
Got it. Point well taken. Just one quick, then I get to Thermax specific questions, but one quick follow up there. Um, we hear headline announcements, Mr. Bhandari, of a bunch of global corporations setting up shop or wanting to set up shop in India. It started with or not, it didn't start with, but last 2 months had a headline: Swiss chocolate maker setting up its third plant in Neemrana, Rajasthan. I believe Skechers doing that. A bunch of electronic component manufacturers are trying to do that. You spoke about the semiconductor plants as well, and there is an area in Gujarat which might be doing all of that. So, what's your sense about the inflow of global corporations wanting to set up manufacturing in India? Is it uh, are these plans, even if they are plans and if they materialize in 2023-24, are this happening at a thick speed, or is it difficult to say that right
The activity is clearly there. Yeah. So even if I talk about our inquiry pipeline plateauing, what it means is that many of those big refinery order pipeline has gone away, but we are still being able to replace it with what are lot of smaller opportunities, but in a variety, in a spectrum of industries. Yeah, and that again points to some of this that we are talking about. Lot of newer people coming in looking to set up plans. Some we win, some we lose. I've got people coming in saying we are setting up a new plastics recycling plant in Nagpur. Somebody else is coming in setting up a very new kind of uh, oil seeds refinery in Pitampura. So variety of different things that give me confidence that at the base level, and I've been back in India for now more than a decade, I would say after quite a bit of time, it feels like there's some genuine move at the ground of new companies coming in, wanting to set up base, and not just in one sector. And this is definitely not just tech led. Yeah, tech has got a big part. There's a lot of, warehousing, data centers, big boom. But even beyond tech and services, in manufacturing, at least there is optimism and positivity. Some of it, not all of it, some of it is translating to the ground. Yeah, the biggest investments, which are the ones which we are expecting, like the steel industry to do. Yeah, we want to double the steel capacity by 2030. All those really big, bold announcements that we would love to see how they hit the ground.
now? Okay, that's still to happen, and we're hoping for that to happen. But it's really good to hear, Mr. Bhandari. Now, how does Thermax do within that landscape? So, like you said, that let's not get anchored to the October IIP numbers. Let's have the big picture view. You mentioned that the pace has plateaued, but it is at a much higher plane. So therefore, I would love to understand, would you believe that Thermax and maybe other companies, but I would presume you will speak of Thermax, that Thermax can grow at a healthy clip CAGR for the next few years, considering that if we are in the midst of the capital cycle, then leaders of that Capex cycle should ideally be able to show that growth?
I would say that the potential clearly exists. Yeah, in the sense that as we have our discussions at the board and continuously as a leadership, um, the environment is extremely rich and full of opportunity. Um, the the corollary is that a lot of this opportunity comes with its own set of risks and with its own set of questions that require companies like Thermax to be able to do new things. And let me elaborate on this statement, because what I'm saying is that the promise exists, and which also is um, not the trivial thing, because for several years in between, where do we find the growth opportunity was also perhaps a question for companies like Thermax. That is not the case. Yeah, now we see pools of opportunity available, but they all come with risk. And I'll say why that is the case. Yeah, through the world that we are going through, especially with the commitments the country and the world at large is making towards energy transition, it is very clear that all companies, industrial companies in India and everywhere, will go through this energy transition themselves, which means the energy mix that all of these companies have will change over the next decade. And that is a will. It is not a may. The 10 years, maybe 8 years, maybe 12 years, maybe 15 years, but the change is a unidirectional change. Here we all have to change, and through a variety of different reasons. So how this change will come about is a mix of three factors. Yeah, how financing will come into play, how new technologies will come into play, and how policy will come into play. Let me share one example. Yeah. So for example, Thermax now has been working on this whole area of bio-CNG for quite some time. Yeah. And now we are reaching the point where India thinks it can set up several hundred bio-CNG plants, and some of the biggest players in the ecosystem are jumping into this space with the expectation that and government is coming up with strong policy, because bio-CNG has the ability to address some of the pollution problems that we have in the north. You have to be able to bring rice straw and paddy straw, which is today burnt, as we all know, and convert that into CNG in a model which is largely commercially viable.
This is under the Satat program that you're talking about?
So the Satat is the Kickstarter.
Okay, fine.
And the expectation that a Satat will help you set up a 5-ton, 10-ton TPD plant. But if the technology works out at 5 tons and 10 tons, at a 20-ton plant, you don't need any subsidy. That is the promise. Yeah, and with that promise now, there are hundreds of plants that are envisioned. Okay, so one, will the technology come through or not? We definitely think technology will come through and working, but there's still risk. We have set 5 pilot plants, but you haven't set a single 20 TPD plant that has been working for a long run. So that's reality, but technology we think we can address. Is policy coming together? Parts of policy, like you talked about, Satat, coming together. But then there are other parts of the policy, which means you still have to incentivize the farmers sufficiently to actually not destroy the crop, but bring it into useful supply. Yeah, and that's a mix of a carrot and a stick, which the government is working on. While you are doing all of that, you are expecting that the biomass that you bring through this will be at a reasonable price. Today, the effective price that the farmer is getting is zero. Tomorrow, the farmer should be suitably compensated, but the whole system should not become so expensive that it breaks the model itself. Yeah, so that's where policy comes in. We are in a very interesting dynamic in a way. And then financing coming into play, which I think for this particular problem is an easier model, because the economics exist for the model to be financially viable. Very, very good. Yeah, similar example played out in bioethanol as an example.
Sure.
Yeah, which played out. Hydrogen is an emerging space where all three of these elements are wildly into play. Yeah, and the government is doing everything from announcing hydrogen valleys with projects to be supported. There are many companies like Reliance and Ashok Leyland announced we are going to do hundreds of buses around hydrogen. Yeah. And there is a whole hydrogen manufacturing policy to be announced, and hydrogen supply and demand specifics, like the government is going to come and say the fertilizer industry and the refining industry will be mandated to use certain amounts of green hydrogen. So all of this comes with a lot of opportunity, but then associated risks on technology, risks on policy, risks on financing. So you don't know how they will evolve. Yep, wow. Steel will have to move towards green steel. We are ourselves working in fascinating areas in bringing multi-fuel into heat, zero liquid discharge into water, waste to energy solutions, municipal solid waste solutions. So a whole plethora of new things to work with. So a long answer to your simple question.
No, but much warranted, and maybe a separate discussion on all of this would be important as well. Since we have paucity of time, I just have one final question on Thermax per se, Mr. Bhandari, and I would look forward to a conversation separately on some of the things that you mentioned. But on Thermax, uh, promise of growth, hopefully if all things come about, can it become a much more profitable growth than what we've seen in the recent past? Your operational metrics. I heard even, or I read about the conversation and the points that came out of the call, maybe that you passed through the worst times from an operational metrics perspective and things can improve. Do we see that happening starting quarter 3 itself?
So the quarter three is 75% or 80% of it is done now. So and it would be improper for me to share anything relating to numbers and forecasts.
Agreed.
That is so immediate. Yeah. So keeping that aside, I would say, and I don't know how much time we have, but I've tried to now rationalize and talk about Thermax as a mix of 3 sub-businesses. One is our projects business, which is, while relatively lower profitability, has always been very good as a cash generator. And this is a place where we don't invest as much from a new plant equipment perspective. Whatever is the base business that we have, that depreciates and you get that, but otherwise it doesn't take too much investment. And there our profitability will remain, you can improve it by a couple of points, but will not become double digit. Yeah? You may reach 7 to 8% up from the 5% that we have, but that's the range that you're playing with. Then we have a relatively big products and services business. This is where you can talk about plant capacity, plant utilization, services penetration, calories from services. And here definitely we can talk about double-digit profitability and maybe even early teens EBITDA is something to aspire to, and that's the direction that we are working on. The third business that we have is the solutions business, which is where we are doing build, own, operate. Yeah, so these are long-term contracts where you put in the Capex initially, and then that Capex gives you a pool of profitability that ranges from 10 to 25 years based on the contracts that you do. So these are front-end loaded from a cost perspective. EBITDA profiles are also bad because initially you are putting in their setup costs, so your profitability is low initially, and then it goes up in a much more assured way over time. So I look at Thermax as an amalgamation of these 3 businesses, and instead of saying will the net grow or not, I would say focus on each part and focus on are we growing profitability in each part, and the mix is the mix that is. So we are not going to come and say projects slow down because we need to hit a particular profitability number. If projects finds 10 areas to grow, but the metrics of generating cash, the requirement of all of that will continue and stay. Yep. So that's a better question, and that's a better way. Thermax also needs to represent itself to its external stakeholders.
30-second answer though. Help the investor understand this better, because the investor will eventually look at the consolidated margins as they come out. He wouldn't have, or she wouldn't have the sense that you would have. Would you reckon the consol numbers might still look better than what they have because of the input cost pressures receding?
I would say yes, in perhaps a short to medium term, but we are in this Goldilocks period, yeah, where you were in a period where demand was so strong, your commodity prices were going up, but you could increase prices as well. Now you are going into a period where commodity prices have stabilized, but the demand as it plateaus as well, you have to be competitive and you may have to let go of a little bit of price in that endeavor. It's a joy of being an industrial company. You're never happy.
Well, but we certainly hope to some very interesting times and some very different kind of projects coming up, because they will change the face of the country as well. And I'm sure you will be at the forefront of it, Mr. Bhandari. So a lot more conversations coming up with you over the course of the year.
Thank you so much.
Thank you for speaking to us today, of course.
Thank you.
And viewers, thanks for tuning into this leg of BQ Conversations.